Every solar panel on every rooftop in America is quietly eating silver and never giving it back. That single sentence is the whole story, and almost nobody on the financial channels will say it to you plainly. So let me say it plainly. The reason this metal just changed the math for the years ahead is not a chart pattern. It is not a rumor, and it is not some trader's price target. It is a physical fact about how the world uses silver versus how the world uses gold. Gold gets hoarded. Silver gets burned. And once you understand what that difference actually does over time, you will never look at the number that brought you here the same way again. Here is the answer. The title is promising, delivered right now, no waiting. The case that silver has entered a genuinely different chapter is a real, defensible case, and the single engine behind it is this. A large and growing share of the silver the world pulls out of the ground each year is used up in tiny amounts, scattered across billions of devices, in quantities too small to ever economically recover. It does not come back. It is not sitting in a vault waiting to be sold on a bad day. It is gone. That is not hype, and it is not a promise about any price. It is a structural truth, and I'm going to prove it to you piece by piece. Now, think about what gold does, because the contrast is the entire point. Nearly every ounce of gold ever mined in human history still exists today. It sits in bars, in coins, in central bank vaults, in jewelry passed down through families. When gold gets used, it gets saved. A wedding ring from 100 years ago is still an ounce of gold. Melt it down, and you have exactly what you started with. Gold is the ultimate hoarded asset. That is precisely why it holds value, and it is precisely why the world's central banks have been buying it hand over fist. Gold, they understand, cannot be destroyed and cannot be frozen if it sits in your own vault. Silver does not get that respect, and that is the strange, beautiful, overlooked heart of this whole story. Silver is the best electrical conductor on Earth. It is in the solar cells, turning sunlight into power. It is in the circuit boards of your phone, your car, your appliances, the data centers running the artificial intelligence everyone is so excited about. And in each one of those uses, the amount of silver is small. A little paste here, a thin film there, a few flecks in a connector. Individually, trivial. Collectively, enormous. And here is the part that matters. When that phone dies, when that panel is scrapped in 20 or 30 years, nobody is going to carefully extract those few flecks of silver. It costs more to recover than the silver is worth. So it goes to a landfill. It is burned off. It is lost. I have spent a long time in the gold and silver world, and I have watched this exact setup get dismissed over and over by people who should know better. They treat silver like a cheaper cousin of gold, a poor man's precious metal. But silver is living a double life that gold never has to live. It is a monetary metal and an industrial metal at the same time, and the industrial side is quietly draining the world's above-ground supply in a way that has no parallel in gold. Gold is a savings account. Silver is a savings account that also happens to be on fire. Let me give you the number that is not really a number, the durable fact you can carry with you. The world has now run a structural silver deficit for several straight years in a row. That means every year, the amount of silver consumed by industry and investment has exceeded the amount pulled fresh from mines. Every year, the gap gets filled by drawing down stockpiles that already exist. And roughly 3/4 of all the silver that gets mined does not even come from silver mines. It comes as a byproduct of mining copper, lead, zinc, and gold. Which means when the world wants more silver, it mostly cannot just go dig more silver. The supply barely responds to price. It responds to demand for other metals entirely. Sit with that for a second, because it is the opposite of how a normal market works. In a normal market, when something gets scarce and the price rises, producers rush in to make more, and the price comes back down. Silver breaks that rule. Because most of it is a byproduct, a higher silver price does not summon a wave of new silver the way you would expect. The supply is what the miners call inelastic, stubborn, slow. And on the other side of the equation, demand from solar and electronics is not slowing down. It is accelerating, driven by forces that have nothing to do with the price of silver, and everything to do with the entire planet electrifying at once. There is a detail here so counterintuitive it should stop you cold. The solar industry has actually been working hard to use less silver per panel. Engineers have been thrifting it, shaving the amount of silver in each cell to cut costs. And yet, even as each individual panel uses less silver, The total amount of silver the solar industry consumes keeps climbing because the world is building so many more panels that the reduction per panel cannot keep up. They are using less per unit and more overall. That is what a demand freight train looks like. And it tells you the deficit is not some temporary blip that a clever engineer is about to solve. It is baked into the direction the whole world is heading. And there is history under this, not just projection. Go all the way back to the earliest days of the Republic, when the Coinage Act set silver against gold at a ratio near 15 to 1. For most of recorded history, that ratio, the number of ounces of silver it takes to buy 1 ounce of gold, sat somewhere in that neighborhood, because that roughly reflected how the two metals came out of the ground. In our lifetime, that ratio has blown out to levels that would have seemed absurd to anyone from that era, stretching at times toward 100 and beyond. Now, part of that is gold being treasured, but part of it is silver being treated as disposable, priced as an industrial input rather than the monetary metal it also is. A stretched ratio does not tell you silver must snap back on any particular day. It tells you that relative to gold, silver has rarely been cheaper, and that the gap has a long history of eventually compressing, sometimes gently and sometimes with real force. Now let me name the enemy, because you deserve to know who benefits from you not understanding this. The big banks, the trading desks, the financial media machine, they make their living on the paper side of silver, not the physical side. Far more silver trades as paper contracts, as claims and promises and derivatives, than actually exists in deliverable form. And a market where the paper claims tower over the real metal is a market that can be pushed around in the short term by people with deep pockets and a motive. They can make silver look calm, look boring, look like dead money, right up until the moment the physical reality reasserts itself and the whole thing reprices violently. They do not want you thinking about the burned silver in the landfill. They want you thinking about this week's price wiggle. And this is exactly where I need to stop and talk to you directly. Because if you are a retiree, if you have spent a lifetime building up $100,000 or more in a retirement account, in a 401k or an IRA, the thing that should concern you is not missing out on some gain. It is protecting what you already have from a system that treats your savings as someone else's raw material. Here is what almost nobody tells you. The same central banks that understand gold cannot be destroyed have been buying it at a record pace, more than 1,000 tons a year, 3 years running, roughly double what they bought the prior decade. They are quietly moving into hard assets while the financial media tells you everything is fine. And there is a perfectly legal, quiet way for an ordinary American to do the very same thing. You can move a portion of the retirement savings you already have into physical gold and silver, held inside the account you already own, without taxes and without penalties, using what is called a self-directed precious metals IRA. This is not a loophole, and it is not for insiders only. If you have $100,000 or more in any retirement account, this is for you. I put together a free retirement protection guide that walks through exactly how it works, how retirees are doing it, and what to watch out for. If you are watching this on your TV, just scan the QR code on your screen. If you are on your phone or your computer, go to jeffreedguide.com. That is jeffreedguide.com. Take a look, and then come right back, because the next part is where this story gets genuinely strange. Here is what makes silver different from almost every other investment you could name. Most assets, when they get consumed, at least stay in the accounting somewhere. Silver disappears, and it has been disappearing in these tiny, uneconomic amounts for decades, quietly, while the above-ground stockpile that the market leans on to cover its deficits gets thinner and thinner. Think of the world's deliverable silver as a great reservoir. For years it has been drawn down a little faster than it refills. And the tricky thing about a reservoir is that it looks completely full and completely fine, right up until the day it does not. The buffer hides the shortage, invisible until it is not. And this is where the industrial side and the monetary side collide in a way that is unique to silver. Consider what has happened when the world's electrification really pressed against the available metal. There have been episodes where the physical market ran so tight in one region that the domestic price traded at a meaningful premium to the international benchmark, and where the authorities in a major manufacturing power moved to restrict how much silver was allowed to leave the country, choking off the flow that would normally close such a gap. Think about what that behavior actually reveals. When a country that needs enormous quantities of silver for its factories starts guarding its supply rather than letting it flow freely to the highest bidder, that is not the behavior of a market awash in metal. That is the behavior of players who can see the reservoir drawing down and have decided they would rather keep the water than sell it. I have seen this movie before, and here is how it tends to go. For a long time, nothing happens, and the people who understand the structure get called cranks and doommongers for pointing at a shortage that never seems to bite. The price sits still. The skeptics feel smart. And then a stress point arrives, and the metal that was supposedly plentiful suddenly is not, and everyone who was told it was dead money watches it reprice faster than they can react. We have already gotten previews of exactly this. There have been moments where the physical demand ran so hot that silver in one part of the world traded at a steep premium to silver in another, because the real metal simply could not move fast enough to close the gap. The paper said one price, the physical said another, and the physical won. Let me introduce you to someone, because I want you to feel this and not just file it away as a fact. Picture a man named Walter. Not a wealthy man, not a speculator, a retired tool and die maker who spent 40 years making things with his hands, and who quietly, over many years, set aside a little silver. Not because a guru told him to, because he understood something in his gut that the finance world had trained everyone to forget. He understood that a thing which gets used up and thrown away, and which the whole modern world cannot function without, cannot stay cheap forever. Walter did not need a chart. He needed patience. And the hardest thing Walter ever did was hold on through the long stretches when silver went nowhere and the television told him he was a fool. That is the real test. Not buying, holding. Because here is the thing the trading desks count on. They count on Walter losing his nerve. They count on the retiree checking the screen every morning, stomach in a knot, and finally dumping his metal into a shakeout right before it matters. If you are holding silver right now and it has been testing your patience, I understand that feeling completely. And I am not going to insult you by pretending I know the day this changes. I do not. Nobody does. What I can tell you is that the structure underneath has not changed, and in fact has only gotten more extreme, no matter what the screen printed this morning. And that is not even the part that actually matters most. Watch what happens in the way the biggest players are behaving right now, because it tells you where you are in the story. Even with these metals sitting near record highs, the speculative crowd is not piling in. This is not a mania. There is no line around the block, no cab driver giving you silver tips, no dinner party where everyone suddenly owns it. When a market makes new highs without euphoria, that is not the top. Tops are loud, crowded, and delirious. This is quiet. And quiet at a high, driven by real physical demand rather than paper speculation, is one of the most bullish and least understood setups there is. The move is being led by metal changing hands, not by gamblers chasing a chart. Now, let me be honest with you about the risk, because a man who only tells you the upside is a man you should not trust. Silver is volatile. It falls harder and faster than gold, and it has been slammed before by things that had nothing to do with its fundamentals. We have seen margin requirements raised in the middle of a rally, forcing leveraged holders to sell, and silver dropping sharply in a matter of days, while nothing about the underlying shortage changed one bit. That can happen again. If you cannot stomach a metal that can drop meaningfully and test your patience for months, silver is not for you, and I would rather tell you that than sell you a fantasy. This is a case. It is not a guarantee, and it is not personal financial advice. What makes the case strong is not that silver cannot fall. It is that the physical reality underneath keeps reasserting itself, no matter how many times the paper knocks it down. So how should you think about what you actually own, if you own it or you are considering it? A few principles, not a prescription. Size your position so that a sharp shakeout can never force you to sell at the worst possible moment, because forced selling into a dip is exactly how the desks take metal from nervous hands. Own the real thing, the physical metal, not just a paper promise that someone else has to make good on. And never, ever sell into the bottom out of fear, which is the single most expensive mistake I have watched people make over and over in this world. Walter's edge was never a better forecast. It was that he was never in a position where someone else could scare him out. Here is the recognition I want to leave you with, and it is the most important thing in this entire video. The smart money already sees this. The central banks buying gold at a record pace, the physical buyers pulling silver out of the market, even at these levels, they already understand what the burned and buried nature of industrial silver means over time. The mainstream has not caught on yet. The pension funds, the financial media, the average advisor, they are still treating silver like a leftover. And by the time it becomes obvious to all of them, By the time silver leads every news segment and every advisor suddenly recommends it, the easy part will already be behind us. Nobody sends you an invitation to this. Nobody is going to call you and tell you the moment has arrived. You are hearing about the structure now while it is still quiet, which is the only time understanding it is actually worth anything. Which brings me to the last thing, and then I will let you go. For those of you with $100,000 or more in a retirement account who have watched this all the way through, I hold a free one-on-one educational web conference. No obligation, no pressure, just a real conversation about how this applies to your specific situation and how the physical metals piece could fit inside the retirement account you already have. Mention that you watched this full video. The honest reason to do it now rather than later is simple. The window where a decision like this is still cheap and calm and entirely reversible is exactly the window when nothing feels urgent, which is right now, while the crowd is still looking the other way. If you are watching on your TV, scan the QR code on your screen. If you are on your phone or your computer, go to jeffreedguide.com. I started by telling you that every solar panel in America is quietly eating silver and never giving it back. That is not a slogan. That is the machine running underneath this entire market, day and night, panel by panel, device by device, in amounts too small to recover and too vast to ignore. Gold is hoarded, silver is burned, and the man who understood the difference and had the patience to hold was never the fool the television made him out to be. He was just early. The only question that matters now is whether you choose to be early too, or whether you wait for the invitation that is never going to come.